systems. And as everyone knows that's been to our webinars or our live trading room, everything that we say and do at Viper Trading Systems is for educational purposes only. Futures trading, forex trading, any kind of financial instruments trading involves risk. Therefore, there's always risk of loss. You should only trade discretionary capital, and that is money that you can afford to lose. Nothing said in this webinar, other webinars we have, our live trading room, or anything else with Viper Trading Systems should never be construed as trading or investment advice. And as always, everyone does trade at their own sole discretion. Any questions on the disclaimer? If not, we're going to go ahead and get started. All right. Bear with me a second. Probably should have recorded that in the webinar, actually, but I didn't. I actually started the recorder after. Well, I'll show it before the room's over again. All right, so let's go ahead and look at a chart. Now, this is gold, basically. When I got up on Friday morning, this is what was happening on gold, okay? Now, and I got up right about in this area right here. Okay, you didn't know what I looked like? Wish you did record me. I'm just an old dude. Just an old dude. I'm not that old. I'm 66. I still feel young. All right, but anyway, we'll go ahead and go over this. Now, let me talk over what you want to do in situations on your charts, okay? Because we're going to talk about, getting out of trades early if they don't go your way. Okay, that's pretty important. Because let me show you something that I look at personally, okay? I always look to the left to trade the right, okay? Now, you'll notice over here, let's just go ahead and draw lightning 3. Let's just draw lightning 3. Matter of fact, we'll draw it from right here. All right, does everybody see on the left side of the chart here, you've got a low, a high, all right? And you never took out this low over here, so that's a legitimate phantom, even though it takes this low out. See, that's like an ABC, so that's legit, okay? But notice on this one right here, you've got that same type of look. So it's a legitimate phantom, right? Except you got to be careful. If they barely take out your lightning 3, that's a good phantom. When they take it out by quite a bit, you got to be a little bit more careful. Okay, so when I went in this on Friday morning, for instance, I just simply hit my insert key, and I got this little trade set up like this right here. I wasn't looking for a short yet. So I just simply turned on my region like that. All right. Now, if this would have gone against me at all, you've got to get out of these trades pretty quick, especially with a couple of contracts or 3 or 4 or something like that, obviously. And the reason for that is because let's say that I break this by 2 ticks and I put my stop all the way at the bottom. Well, everybody knows that Object Trader actually looks at the last 2 bars, okay? And then the third one that's drawing, it doesn't count, but it looks at the last 2 that are not drawing. In other words, they've already formed. They've already been, printed on your chart. So Object Trader just simply draws a box on 2 bars. Okay, so basically it could be as small of a box as 4 ticks if 2 bars were side by side, but usually as a rule, bars aren't exactly side by side. So, in a case like this, for instance, you got 4 ticks. You got 4 ticks here, but it looks like 1 tick in here. So that's like a 7 tick range right there. Okay, the little region. Everybody see what I'm getting at? Because bars don't have to, for instance, they don't have to do 4 ticks and 4 ticks and the next one open, right after it. Okay, so when you draw this little box, it can be, as small as, usually I've found it no smaller than like 5 ticks. Usually it's going to be 6 or 7. And a lot of times even 8 because it's looking at the very last 2 bars. Okay, so when you get your box, you then have the right, obviously, to size it or whatever you want to do. Okay, now you can always look to the left to trade the right and see that you have resistance here, but that's too far to me. In other words, I wouldn't do the box like this, simply because then you'd only be looking for a mid-band to begin with on a phantom trade. So I would draw my box more like I had it just a second ago. Now, that's a fairly risky trade though, simply because it's already had 1 phantom. It did ratchet up, but it is a phantom trade. Okay. And if you happen to get this little trade like this, what you want to do is you just don't want it to go against you very much at all. Now, some of our people actually use, for instance, if this popped out of this box right here, okay, they'll go ahead and put a stop literally in the middle of the bar. Maybe not just inside the box, but just in the middle of the bar that it pops up above, if it pops up above it. Let me show you what I'm talking about. Now, this went red right here. Notice that? Now, this is a little iffier even now, but this is still a phantom because you've actually got your yellow midband, okay? Now, usually as a rule, when it did that, I would have probably already jumped in it. But anyway, let's just let it break that if it's going to break. And we'll see. You'll see what I'm talking about here in just a second. You want to make sure that you don't just leave a lot on the table when you get in these trades, because if you leave a big old stop on it, you're going to get taken, and then unfortunately you're going to be digging your way back, and that's a really, really tough thing to do a lot of times. Okay, now usually what I would do in a case like this, I might even go ahead and go like that wick candle, because see, I'm getting a little higher low right now. Everybody see that? If this bar closes up, that is. Okay, it didn't close up, so let's see if we get any kind of a higher low. There's a low. Candle down or up, we don't know. It looks like it may be out. Okay, so if this does actually pop out of here and I go long on this, then I could put my stop literally just, like just inside this bar that it's trying to form. Or if it pops up and this bar closes, you can put it even inside this bar that's trying to form. Let's see if it actually gets the trade. Okay, now see, okay, wait just a second. Let me slow this down. Now notice that this popped up, okay? Now instantaneously you want to put your stop, like at the box itself, for instance, because we may not get our target. Okay, you can put it on exit on close like I do a lot of times. Now you can also simply say, you know what, I'm up decently. I've got 12 ticks, or actually 6 ticks, pardon me, and you could take one off. Or you could take one off when it gets to midband and just simply leave your target at midband or just a tick underneath it. Okay? Now, to me, that's a pretty safe trade right there, because I'm not risking hardly anything at all on this trade. Now, I'm not going to reverse it. This may break down. It looks like it might actually, because you have a high, low, lower, high, lower, low. But if we get a higher high again, or it starts stair-stepping up, we're still good to go. If we get a lower high than this right here, like so, then more than likely we're not going to be heading up. And predictor's saying it's only coming to here. So in a case like this, if predictor says that, you could actually just put your targets right at predictor, and you might get, say, a $230 trade. Okay? Because those predictors are pretty good at knowing this price action, because they calculate it, in real time. Let's see, I've heard reversal bar mentioned. Could you show a reversal bar, Lisa? Well, like, to give an example, this little trade right here, basically you had a same low right here, and then you had a high and you had a higher low right here on this bar. So this was a legitimate type of a box to draw. See how if you're not careful, they can wick you in? See how we had that box drawn right there, and with touch plus 2, it didn't get us, but it could have. I mean, it could have wicked up 2 ticks and gotten us in. Now, the way we designed this object trader is that it needs to get the 2 ticks above plus another tick confirmation, so it would really have to be 3 ticks above. If you want it just 2 ticks, you want to set it on 1. Okay? Now, let's say, for instance, that you're in this trade and we're only risking, that amount of money right now, just down to that line. Now, could it get us and we won't make any money on the trade? Okay, I like to at least get, if I can get like 150 or so, you might just go ahead and hit the button and get out of one. That way you're getting half of that on that first contract. You see what I mean? Because you're not at $120 unless you hit close, because you got 2 contracts on. So like right there, for instance, you could sell one. Okay, you could sell one of those, and now you're still up $180. Move your stop just under like the previous bar, to give an example, if you want to really stay tight with it. Now, you'll get taken out of a trade like that a lot, but if you want a really, really, really tight stop, that would be the way to do it, because you might not want it going bar down, bar up, bar down, and start stair stepping back. Okay. Now, what if this trade had, what if you had instead said, you know what, this really looks like it's breaking down, and you would have boxed it right here for a short? Would that have wicked you in? It could have, depending on where you had your limit, if you were using Chart Trader or whatever. So, that's why, to me, personally, it's just like this. If this is going to really break out of this box, see how when they break out, they keep going. If they don't keep going, you just don't want the trade. Okay? Because as a rule, if they're not going to break that box and continue out of that box, then we're really, pretty much done with the trade. There's predictor right there. Let's go ahead and tighten it just in case. That is a red background, so that concerns me a little bit. All right, anytime they get a red background, by the way, that's more than likely going to be a trend change. Okay? When you get this red background, unless they decide to take out this swing over here to the left, they're really not heading up. Okay? Because that red background doesn't change just for the fun of it. It's looking at this overall trend. So when you get this red background like this, you can definitely start boxing in like at mid-band. But let's say, for instance, that you said, okay, I'm going to box this in, and we're only going to take a long if it breaks to the upside, because we've already gotten out of our long. So we do something like this. All right. And what if this actually wicks above here and gets you in, but then decides to roll over? Now, this is a mid-band trade that we do teach in the room all the time. If you do want to take this little trade at mid-band, you box it in. You could actually box it both directions. Now, what I would probably do, I see a swing to the left there where my line's at, so I would do that myself, because that way you don't get wicked in. So we'll take this trade either way it goes too. And let's see if we can get, if it's going to go our way right away, or if we're going to have to get out of that trade early and save some coin. Now, does anybody know why I went ahead and boxed this both ways? Because this is a trade we definitely teach. Red background, yellow midband. Okay, the trend is up on the midband. The trend is down on what we call the background colors. Okay, and the trend is also somewhat down because of these red bars. So, you could either head up or you could head down. Now, I don't see it very often go from red to green quickly. As a rule, you'll see red stays for a little while, then it goes to this color. Red stays for a little while. Red stays, goes to that color, red again, that type of thing. So you don't see very often that red doesn't actually do a trend change. Okay? So that's a real quick heads up. Does that mean you couldn't take that trade that we just took on Phantom? No, because Phantom is a good trade. But keep in mind that a Phantom trade, you are just either scalping or you're going to be heading up like this one did. Now, this one here, let's say, for instance, that you had done this Phantom trade down here. All right, this is a legitimate Phantom. Let me get rid of Lightning 3. Let me show you something I look for. This is a legitimate Phantom because it touched line 2. That's not my favorite trade. With that trade, you want to pretty much grab it the second the bar closes up, and then just stay with it until it gets above mid-band, and if it comes back through it, get out. Okay? This is a legitimate Phantom trade right here. This is my favorite kind of Phantom trade right here, because your bar actually goes into a complete closed bar below line 2 on a long Phantom. You're looking at the mid-band, you're looking at this background. So that's a legitimate Phantom right there. This is an iffy one. This one never touched line 2, so I don't usually take that one. See, that would never flash. This one would flash on your Phantom deal here. This should flash. See? And that one doesn't. And that one does. See there? Let's see, when to not use exit on close if your stops are pretty tight. Well, that's the thing too, Brian, on your question. If, here's the thing, if you can be green on any trade, of course, that's absolutely the best way to do it, but you want to keep as much of your coin as you possibly can, but you also want to give it a little bit of wiggle room too on your runner. So, for instance, let's say that you decided to use, instead of using the, well, this one never got you anyway. So if you would have put your, when it broke out of the little box here, it just kept going up, so you were okay. But you don't have to use exit on close. Exit on close simply means that in a long trend, it has to close below the exit line, and on a short, it has to close above it. Let's see, any questions on this? Let's see, John says, it looked like you only had 2 ticks of risk. Is that your normal risk? No, John, on your question, I only had 2 ticks of risk because it popped up. And then's when I wanted to tighten my stop up. See, to give an example like this right here, let's just box this in again just for the fun of it, just for looks. All right, this is the way we saw the trade right here. This is a legitimate phantom trade as long as this is this color background. See that background right there? Now, when it turns red like this, that's a little riskier. But you can still box it in as long as that midband hasn't changed colors. So this particular trade, turned out to be a good trade. And by the way, you want to really grab it as close to line 1 as you can. I usually like to split the box like so, and I'll grab it when it gets down in that area. And then you have to give it a little wiggle room. And if it breaks hard, you're toast. You'll get stopped out. Or you can wait for the confirmation, and that's the break of the box. And that confirmation, is a safer way to trade it, obviously, because this went sideways quite a bit. And let's say you got in right here, and you were up, and then you were down, then you were up a little bit, then you were down a little bit. It's just up to the individual. I personally do like a line 1 trade, like this right here, for instance, the first one. I love that trade right there. If I'd have been up at 2:26 in the morning, that is. But that's a legitimate line 1 to 2 phantom trade. Okay, so what we were talking about there, though, John, on your question, that's a very good one because you want to get out of your trades early if they don't go your way. All right, let's put our box back. When we got in this, see, we had a bar up and we had another bar up. So when you do that, you can actually kind of put your stop just right in the middle of the next bar, because if they're going to do this little, zigzag type effect, you might not want it anyway, because, you got in down here, and once you pop up a little bit, you don't really want them coming back into here. Okay. So when you draw a box, I'm going to draw it manually instead of using the region because we've got a trade setting up. But when you are in a trade like this, see how this popped out of the box and it never looked back at the box? That trade can never hurt you. Let's look at this one here real quick. Let's see if this one, if we roll over or if we go up, let's do the same type of trade setup. I'm going to have to speed this up because it's like 7 o'clock in the morning. Okay, we are short on it. Okay, now let's slow it down for just a second. Now, let's say that this decided not to short and it goes back inside that box. See, we've got our fill right here. Our stop is way up here. We're not going to leave it there. All right, we're going to do something like that. If this bar doesn't go our direction and it decides to take out that, in other words, a bar down, if this bar went up and another bar went up, they might kiss here, but they might not take out that line. Okay, so that's like a really, really tight type of a stop on it. Okay, that's if you're not sure a trade's going to go your way, because we're conflicting. We've got a red background, we got a yellow midband. We did get a short rollover. Okay, and it's working so far. Okay, and that's why boxes are so great, because at the time right here, we didn't know if this was going to break here and go up. It very well could have. And if it would have, you would have had a low, a high, a higher low, and a higher high, and it would have taken out this swing and headed up. Let's see, so when you take a phantom with a background change, do you take all profit at mid-band? You really want to, Jonathan, on that one, because when you get this red background, that's usually portending a trend change. And you will usually, as a rule, get mid-band or close to it, though, so you can get some profit on it. And I love phantom trades. You know, you hear me call them all the time in the room. Do all of them go up and continue just taking out the tops? No. And especially if they turn that background red. It's the same way on a phantom. Let's see if we can find one the other direction. Here's an example of the other direction right here. See, this was actually heading down. That's a phantom trade. Everybody sees that, right? Not my favorite because I don't like it just to kiss 6 and roll, but I will take it. And usually what I do, if it kisses 6 and rolls, I take the trade, and it better go my way to at least mid-band. If it kisses and rolls and then pops right back above that line, I get out, because then they're going higher. This is not a legitimate trade, although it could be with predictor, but let's look at the next phantom. There's a phantom trade right there, line 7, okay? Now, if you took this trade on this bar right here, let's just hypothetically say you did, and you're in the trade, all right? And you're going to put your stop literally at the bar that closed, and we'll see if you actually get a trade. And see, you're still okay on it until you're not, okay? Now, this trade would probably cost you about 6 ticks. Now, could you actually reverse the trade in a case like this? Well, probably, because you're looking at this over here and you're saying, okay, I got a high, I got a low, and I got a higher high. So this could easily head up, right? So if you did take this at line 7 and it did happen to start heading up, you could always box it like that and actually flip the trade, and you'd probably be okay. Okay, that'll happen quite often too once they run out of steam. You know, for instance, you know this really, at the time, you know, you basically bottomed out down here. You were kind of heading up at the time to begin with. You had higher lows. But that is a legitimate phantom, and I would definitely take it if I saw it, if I was trading in the room at that time, because that is a true legitimate phantom. First time after a trend change, because it went from green to the short colors. That's your first one. And that's your second one, but this is your line 6 one, and that's your line 7 one. And a lot of times they'll do that. They'll actually take this out a little bit, hit a phantom, and roll over and keep on trucking down. But if they don't, what you want to do is be able to get out of that trade quickly. Let's see, phantoms happen enough to just trade those. They do, actually, Lisa. They absolutely do. Of course, you got to kind of be at your computer to get them, unfortunately. Let's see where we're at on this trade. Now, see how our stop hadn't been taken out just yet? Now, this is a little on the iffy side. Are we going to get taken out? We're going to find out. If we do, we do. But I would box it again if it does take me out. It didn't get us. See how they do that when they're really heading down. Like, see, let me slow this down again. You've got a down candle, an up candle, a down candle, and a down candle. So basically, you know, see where they were just checking that swing? See the thrust, retrace thrust? They were just checking that swing right there. That's why we put our stop right above it. Let me draw it for you if you don't see it. Some people don't see this until you draw lightning. Let me draw lightning from down here. Well, that it's lightning to me, but anyway, it didn't draw it. But to me, this is what this looks like. Train your eye to see this. See this little thrust, a little lower high, like so. And then broke it, right? That's when we got in. All right, so where do you expect that to hit its head? Anybody? If you were seeing this with your mind's eye, you say, okay, it's breaking my box. Where's it going to check before it goes back down some more? It's going to check right where it broke down. That's why you can put your stop just above that with the exit on close. or without exit on close if you want. Okay. If you're up fairly nicely already, you can take more of a chance with it. Okay. Let's go ahead and get this out of the way. That looks pretty good. Anybody trade gold on Friday? Now, when we opened the room at almost 8 o'clock, there was a trade called, as a matter of fact. Does anybody know how to see the trade in real time where it's more than likely going to go? Anybody at all? Let's see, can you please talk about how you would have anticipated the retrace after the Phantom at 230.01? Let's go back there. 230.01. Oh, this one right here? I'll show you how to anticipate that Phantom right there. This trade, again, is one of my favorites. You know, you go from one extreme, long midband, to short midband, to long midband, and then you're looking for a Phantom. So what you've got to do is in your mind's eye is just say, okay, I'm looking for a trade right there. If it doesn't ratchet up, I may be looking higher. Let's see if it did. Seeing it never ratcheted up. So you got to trade there. And you got to trade right there. See how you do that? Now, if this would have ratcheted up, you might have been higher. Because remember, this Phantom is stair-stepping. So for instance, like right here, okay, that's a Phantom, and it's stair-stepping. See this right here? And you just draw your box in your Phantom area. So if it gets in that Phantom area, you know, you can get a good trade. Now, could you have actually shorted this up here, you know, when it broke support? Yes. But keep in mind, what will get you on the wrong side of trading a lot of times, unless you use like 2 charts, is that your mindset is short while my mindset's long. You see what I mean? Or mine might even be short here, but then your mindset's long here. So you got to be careful of that, because, you know, this is a 10-tick trade down, but this is also a 10-tick trade up. What would your second chart be, Triphone? Well, what you can actually do is you can trade both directions if you have 2 charts. You know, for instance, you could have boxed this, shorted this, boxed this, and went long. And your short would have been stopped out the moment it went above this box. Or you could even flip it as far as that goes. I like 2 charts myself because you usually just want to go for 10 ticks. The retrace that happened at 244 after the Phantom. Oh, this one right here that you're talking about. This one right here. Well, if you were watching this in real time, you know, let's just kill this. We don't care about trades as much as teaching it, right? But let's say that you haven't seen anything except you saw the Phantom right here. All right, and you boxed it in and you took the trade. You know, keep in mind that the moment this touched midband, you're up about 10 ticks, because you're going to get, you know, a fill out of the box. So that's 6 ticks, 6 ticks, 6 ticks, 6 ticks. So to midband is actually, you know, 12 ticks from that line 2 to line 4. If you can get above it, that's a great trade. Okay. For instance, if you had, say, 2 contracts and you just decided, you know, I'm going to take one the moment it hits midband, if the bar even tries to close down. Bar didn't try to close down, by the way. You know, if it hits midband and then it hesitates, and, you know, get out of one. But if it goes straight through it, don't get out of any of them. Okay? You only want to get out of trades when they hesitate. So when this actually, you know, for instance, this one right here thrust up like that, you could easily just take profit on 2 contracts and you could be done for the morning if you were up at 230. Okay? But let's draw on our charts and see where it would be coming back again, though. And keep in mind, our predictors are really good too. But let's draw on our chart and let's see where our swings are. All right, you got a swing right over here. I'm going to draw it. You got swings right here, but these have already been tested. And you've got a swing, same swing right there, right? Right here at this little swing. See it thrust, retrace, thrust. So those are your swings right there. So if this comes back into this and comes back above that swing, could you take that trade? Or when it bounces off predictor? See this, now one thing keep in mind too, this is something that I see all the time, but it doesn't do it every single time, so it's not something you just cut in stone. All right, is when you have several of support areas and you have one again right here, which they hadn't tested yet. See, that's what they ended up doing, is testing that one. So that's why it's important to draw on your charts. You know, when you get a thrust up and you look to the left to trade the right, which is really important. You know, let's say that, let's get rid of this. Let's say that you got the phantom, or you missed the phantom trade, but you saw this happen in real time. All right, and you said, doggone it. Well, you don't want to buy way up here, right? You got to wait for a retrace. So always look to the left and see where they haven't checked yet. You know, draw your line. They haven't checked there as far as coming back, but then looking to the left to trade the right, they haven't checked this area here. You know, just draw your lines on your charts, and you'll see when you draw your lines on these lightning threes like this, that's pretty much where they're going to check. Okay, and you just watch it and you see it, and if it kind of comes down below one and then pops back above it, take the trade. Okay, what if it would have come down below this one instead, still kept a higher low than this, and then popped up? Same thing applies. Because see, you know, we drew our line right here by looking to the left to trade the right. So when it came down below it and popped up above it, you take the trade. What if it would have not done this and just came down below this one instead and oscillated right around here and then popped up? That's where you take the trade. You've got to take it where they haven't checked yet. Okay? And sometimes that's difficult, and it's even difficult for me as much as I've watched these charts, because I like to look to the left to trade the right, and I look at these lightning three swings mostly. But I also train my mind to see these, you know, these lightning twos also, and even ones, but ones aren't as important. All right. Yeah, and a green background, you're looking for, you know, obviously a long trade to begin with. Let's say that you got up in the morning and you saw this was happening right here, and you were kind of in a range. Okay, this is where you're at. Let's pretend this is 8 o'clock in the morning instead. Does anybody see where this would change trends if it was to decide to break down? Anybody at all? Because it tried right here. See the thrust, you know, binged around, and then it broke this support right here. Okay, so then they headed back up. But if this was going to really break down, it would have to break that. Yeah, absolutely. Because if it didn't break this, they're not heading down. And see, they didn't break down. Okay. Now, another thing to look for too, and you know, don't discount these at all. They're not going to hit them exactly, but when they hit these predictors, okay, and you get like a phantom type trade like this one right here, see it flashing green, take it, box it, and take 10 ticks. This one's flashing green, box it and take, you know, 10 ticks or whatever. Could this have been taken in 2 trades instead? It could, because see, when you got long down here and it went all the way up to this top and didn't take this top out and it rolls over, you can get out of that trade, or you can simply hold it with your box and let your runner run if you want to. Okay, because see, you could have had 25 ticks or so, and it took 15 of them back at least. And that's the nature of trading, unfortunately. If you even use Charles's method of getting out at mid-band, you would have been long, gotten a nice trade, gotten out at mid-band, and then you would have probably boxed in and gotten in again. Yeah, that's the thing. You can always lock in profit and look for re-entry. Because, you know, for instance, on a deal like this, when you see this happening in real time and those bars go straight up like that, and that first bar that goes down and that second bar goes down, you can get out. You can never go broke taking profit. That's right. Okay, so let's see if we can go to the right side of the chart and see if we can figure out another trade. What do you think? Now, we're not going to take it unless it goes at least into mid-band or a predictor, okay? And we're going to only look for Well, like for instance, if it comes into this predictor here, we'll look for a trade, and then we'll just watch it. Let's just see if we get something. I'll fast forward it. There's a predictor right there. Now, it didn't come into it. There were some trades in here. We took the one, remember, but we've already closed out. So we're not thrust traders, so we're waiting for a retrace, right? That's important because, how do you know where to get in otherwise? For instance, if you had missed this trade here that we just set up and it was doing this, where do you get in here? Do you jump in all the way at the bottom of a thrust? Do you jump in here? Uh-oh. See what I mean? You can't, because you don't know. The thing is about a thrust can be like an ABC type move, that they usually are, by the way. So technically you've got an A, you don't have a B. There might be a B, so A, B, C, all right? That's pretty much what that is, right? So let's draw a trend line and let's see if we can figure out kind of where to get back in this thing. And predictor is right there. It didn't quite come to it. That is a lower high, by the way. You can take that if you happen to be up at that particular time, but I don't like that kind of a trade as much. That is a minimum criteria, almost. Everybody know what I mean by almost? The minimum criteria has to close above stealth and line 2 on a short, and it never did that. Right, so I don't trust that when it doesn't. So let's see if we can get one. Oh, we don't even have. Let's go with more data then. Let's see if we can get something. All right, here we go. Here we go. All right, so what do we got now? Anybody? We got a mid-band trade, right? So what would we do? And you want to take a chance, for instance, that we're only looking for shorts, right? Because look at our trend: high, low, lower high, ABC, lower low. So that's your high. They'd have to take that out to go long, right? Okay. So we're going to box this. Matter of fact, it's already breaking a box, so I'm just going to see where it just broke the box right there. Let's put our stop nice and tight. That's the way you would do that. All right. Now, you want to wait for the close of the bar. You can certainly do that too, because see, I just got wicked in and it's not going my way yet. Okay. This is what we're talking about, for instance, what if this has already cost me a few ticks? Could I actually go ahead and just hit the button, or could I just tighten my stop? Maybe I made the wrong decision, so I'll put exit on close right there, just in case it decides to come above that second candle back. Okay, because maybe I made a mistake right here. Maybe it's not going to roll over. Now that's tight, but that is still 4 ticks. It'll cost me $80 plus slippage of a tick, so 100. Okay, but I'm not sure because I actually got in on a wick instead, so I tightened it so that I'm not going to lose on that trade unless it decides to pop above that line. Okay. Now, if I would have done it right, I'd actually do a region instead, like so, and possibly wait for it to at least touch +2 and short it. Okay, I don't think I've got this set for more than 2. Let me check. Yeah, I've got it set for 2, so it's not going to do any more anyway, so we'll just turn that off. Okay, so I'm not going to take a chance on this trade just in case, and it looks like we're going to be okay. Now, there's times, believe me, that you're going to get stopped out of that trade, but let's go back, though, and analyze this particular trade here. What if I would have said, you know what, I got in on a wick, like I think I got in, remember when it wicked just barely down? Okay, if I would have put my stop way up here instead, I would have had, instead of this little stop right here, I would have had a 9-tick stop. So that's $180 against me. Now there's another way that you can do it too. And I do this quite often also. If I would have put my stop at mid-band, but if it would have gone back instead, like let's say this candle didn't go down, it did go down, but then the very next one went right back up, you can always get out of just one of them. And then you're not risking as much by, putting that other stop, say, in the middle of the next candle or above the next candle. Let's see, on Friday in CL late in the session, you didn't take a yellow bar mid-band trade. You said you were going to wait until it goes up through mid-band and then rolls through it, then broke and ran. How'd you decide not to take the first one? Do you remember? What time was that, Mindy? I'll look that up. That was that's where we took that full break, wasn't it? That's where we took the full break instead of getting, zapped around in the middle of it. It was just the way it was acting. It was just a feeling. It turned out it was right, but it was, it was just more of a feeling. Now, when you get something like this, just like Gene said, for instance, you can go ahead and go to break even. And by the way, when you get up even a little bit, just watch the bar itself. If a bar goes up, you can always get out of one of them. You don't have to just let them take all your money. For instance, we don't know if this is going to continue breaking or not, right? We just don't know. Now, if you want to ride this trade for the gusto, then what you got to do is you got to wait for a thrust, pullback, and stay with the trade. Now, if you want to take coin when it comes down to a bottom like this, see where it came right to that bottom right there, you can go ahead and take one off the table. For instance, like right there, I'd pretty much, if it went back above that resistance right there, you could take one off and just ride your runner. Now your runner, you pretty much want to actually trust your swings across here. And keep in mind that we called this trade on gold, I think pretty much, well, when I opened the room, this was about 750 right in here. I'm pretty sure I opened the room at about 750, 51. So you could have actually taken a trade like this. Now here's a predictor type trade, by the way, if you happen to have grabbed that like that. I grabbed it a little bit late, but that was a predictor trade. Let's go to oil and let's check that out for Mindy, because is everybody getting what I'm talking about here today though? How you can protect your coin. And, the only time they're going to really zap you is if they get a really quick run. And they do that occasionally. You will get a fairly quick run sometimes. So let's kill this and let's go to an oil chart. Bear with me a second, because we had some trades in there on an oil chart too. Yeah, we had some trades on an oil chart on Friday. You can clearly see there. Now, you had what we call a phantom trade, right, at about 8:22 on the morning that we had that. And could you take this trade just real quick? Let's just diagnose this trade right here, because I called this on Friday. I remember this. Oh, it's still on gold. Sorry, it's paused. All right. Right here is a phantom trade. There's two phantom trades here, by the way. This is number one, and this is number two. Okay? Now, my favorite phantom is when it gets below line 2 and line, between line 2 and line 1, and reaches the criteria of ratchets, goes from a extreme background to the new, not background, but mid-band, to the new mid-band. So you're looking for that trade, 10 ticks. You're looking for that trade right there. See if it works. All right, you're in. You're still in. Still in. Now that makes me a little nervous when I see that particular bar right there. Anytime you see what's the shooting star type bar like that, if that next bar doesn't go up, they'll do this quite often where you'll see this type of a bar and then the very next one will go up and then you're okay. If that next bar goes down, I'm usually out. Now, why would you do that and say, well, you know what? It didn't go back in the box. And you're still okay if you waited for the close inside the box, right? But keep in mind that that's a lower high too. You know, they didn't go ahead and zap on up and head up. Now, I found that little bar right there, usually as a rule, see, here's one right here, and the very next one was down, the next one was up. You know, sometimes they'll just head up after that. But we're talking about getting out of trades early if they don't go your way, and that's one of them that I would probably not trust. Simply because, and if you did, let's say that you just said, okay, I'm going to go ahead and take one off. That way I've got $50 profit in that trade, you know, maybe 50. And then if it goes back in the box that I just drew, get out totally. And I don't care if it goes up after that, because then I'd probably go ahead and wait for it to stair step again. Okay? Everybody see that? Now, probably what it did, it more than likely did, that is a lower high again. Okay? Now, if you were seeing this in real time and you said, you know what? This is a high, this is a low, this is a lower high, this is even a little lower low. Are they really trying to break down? Well, you can actually box this, you know, to where, you know, for instance, if you said, okay, if it takes out this little area right up here that we tried to get in to go long, then it's more than likely not heading up anymore. Just one sec. Sorry about that. I didn't realize I had my phone in here. It's not normally. All right, so in other words, see, we're thinking, okay, this is a good phantom, but it's not working out anymore. Okay, that's a 10-tick trade, so you made some money. And like I say, when you take this little line 2 one, I usually find that just touches mid-band, because they're usually going to do an ABC and give you the true phantom, kind of like they did over on gold. Remember it? But here's a true phantom right there. See it? It's a perfect phantom trade. But let's diagnose this one even. Let's just say that let's look at this. This is a good one. All right, let's say that you said, you know what? This looks like a good mid-band trade that Gary teaches and Charles teaches. So this is where we're at right now. And if you boxed it this tight, like so, now we clearly saw that didn't work out, right? So I want to show you how you can get out of this trade. Let's just box it in. All right, let's say that you're in the trade. All right, that's a legitimate mid-band trade. Now, the first target I see to the left is right there. Just tagged it. Gave you that bar, didn't it? 3 ticks wick, 1 tick body. Stops inside the box. Now, if this was going to head up, the very next bar would go up, or it wouldn't take out the box, at least. And if it does, then you can absolutely get out of that trade. And see, that one did. It closed inside your box. So that would be either a scratch trade or a loss trade. But you don't let it go all the way to the bottom of the box. Okay? Legitimate mid-band, no question about it. Absolutely legitimate. That's a trade we teach, and that's a trade we would take in a heartbeat. Okay? But if you draw on the left of the chart and it doesn't take out that resistance, and you draw on the left and it definitely didn't take that one out to the left there, then something's wrong, that all they're doing is checking resistance instead. And if they do that, and you draw on your chart, so you can clearly see that's lightning. Let me draw it. See there? So all they did is test that, and it never broke up, and it goes back in that box. You can get out of that trade. Okay? Or you're going to have to draw bigger boxes. For instance, if this is your resistance here and you look over here and this is your resistance, you're going to pretty much have to get in a trade like that. And I don't like that trade. I like this little trade that we just drew. And it did work out as far as, you know, for a few ticks, but don't let it go against you, because, you know, you could all of a sudden say, okay, you know what? This is going to be a mid-band trade and I'm just going to trust it. And I'm going to say, okay, I'm even going to put my stop under here. They'll still get you. See there? They still got you. So, you know, you don't want to do that. Now, could technically this have been a short from here if you boxed it in? Yes, but the same thing applies, you know, and I don't like to personally short against blue mid-bands myself. I like this trade right here. That trade seems to work out quite often. And, you know, if it continues up like that, I mean, wasn't that a better trade? But keep in mind that this one was a legitimate trade and you just got out of it pretty quickly. The only time, like I said, that they'll get you on that particular trade is if they do it quickly against you. But keep in mind, if you were to get in that trade like I just showed, you know, and this is what you saw in real time, and you said, okay, I'm going to take that trade the moment it goes above that mid-band again. So let's say you got in at 04. Well, it only went up to 12, and it probably didn't even hit it, like 11, okay? So that didn't get a scalp. You know, Charles likes, for instance, a scalp from mid-band to line 6, and that never got to line 6. But if they kiss resistance and roll like that, just get out of that trade, you know, just as quick as you can on your box that you draw. Now, don't short it, because then you're still looking for a trade of a long until they decide to really start breaking down. Now, when they started breaking down below here, you got a high, low, lower, high, and then you look to the left. I like to always look at one more swing, and I draw lines on the chart. And usually if they hold that, see how they hold that left swing instead? And then you take off again. I don't know why they do that, but they do it all the time. Okay? Everybody see how you can protect yourself starting Monday morning? Try it in sim. You know, just try it in sim. Because here's the other key to it too. When you've gone from one extreme to the other and you get these mid-band trades. Now keep in mind, mid-band trades do not have to come to mid-band. If they don't come to mid-band, okay, like this, you can pretty much see that they hit these predictors, right? Now I draw on my charts, you know, like I've got a little thrust, retrace thrust. So I draw 2 lines on this chart, like right there and right there. And pretty much if they bounce off that, you're going to want to go in that trade, especially if predictor says to. But let's take a hypothetical scenario here too. Let's pretend that you got in on this bar, okay? And you said, you know what, if it takes out, if it doesn't just keep going, I'm not going to stick with the trade. Then, you know, pretty much won't draw. There we go. It went your way, okay? But if it doesn't, you got to get out. For predictors, when do you decide to enter a circle as opposed to the dotted line? I don't use the dotted line as much, Louis. I find that these predictors will draw right on top of these swings to the left. And, you know, there's an algorithm in it and everything. I'd have to look at it and see exactly, you know, how we did that years ago. But, you know, a good bounce type trade, this will pretty much tell you that it's getting into your mid-band area with just these colored bars. Now, this one didn't go into the yellow area and close in there, so it's actually what we call a minimum criteria trade instead. You should see this flashing right here, I would think. Now, I might not have enough time on this because I'm way back in time. Let's see here. Yeah, I've only got 480 minutes, so we're way back. But that would definitely flash as long as it closed below line 6 and below stealth. Can we also look at the mid-band trade at 8:29? You got faked into a long there, Jonathan. That was at 8:29 my time. Let's look at that. Let's just get to it and don't go past it so we don't know what happened. 8:29. That was a monster move before we opened the room, wasn't it? $8.29. Let's see here. Close enough right there, right? All right. Let's get rid of our lines. Let's look at our chart. All right. Anytime they've thrust up like that, I draw my lines on my chart. And they've already been past that swing, so this is your next swing down right there. This is, and that's the same as that. If they break this, basically you're just breaking what we call your I guess it would be more like your minor trend, right? Okay. So, and this, oh wait, you're wanting Friday, weren't you? You're talking about Friday. Sorry about that. We're way back because that looks good to me. Let's see here. Let's go to, sorry about that. I didn't realize I was way back. We're looking for phantoms. Phantoms don't happen all the time. Okay, so you're talking about this trade right here. Actually, it went further, didn't it? You're talking about right here, where it just got to 8:29. This is 8:30 in the morning right here, like so. So when did you take the mid-band trade? You're talking about right here where you took it? About 8:22. Right in that area right there. So let's say that you were looking at this and you're thinking that you're going to have a mid-band trade. First off, let's look at our swings. Let's see, they tested that one, so you're good on that one. They haven't tested that one, by the way, except with that one wicked candle right there. Okay, so right here, for instance, if that next bar goes up, if you box this in right here, like so, and then box it in again like so, if it went above mid-band, it never went above mid-band. You'd be long there. So is that the one there that faked? Be sure and don't go just because it touches mid-band unless you get a confirmation bar, or at least tries to tick up through it. But keep in mind your little boxes. The tighter you can make your boxes. Now I know, a long time ago we used to go for a little bit larger boxes than we do nowadays, because we're basically getting into trades a little quicker, but then not letting them go against us. This one I don't think ever did a mid-band trade. Let's see if, like there, is that what you're talking about? Where it went up through mid-band? On that, is that it, Jonathan, right there? Oh, if it broke above 50 that we would take it? And we would have, you're right, and that is a legitimate entry. Keep in mind that your phantom, that was also called, wasn't it? Didn't we take a phantom trade down here? But let's just take that hypothetically, though. If that went up above 50 and didn't keep on trucking and that next bar rolled, just get out immediately. Okay? Because in a case like that, if it doesn't go ahead and just keep trucking on up, then it's more than likely not going to. There's no question about it. That is a legitimate, it's even a lightning. See, you have a thrust, retrace, thrust. That took out that swing to the left. No question about it. That's a little bit more of a breakout trade, but we did talk about that. I remember that on Friday. But you also remember what we talked about too? We actually shorted this puppy when it took out, if I remember right, wasn't it 35? Yeah. So if it touches it like that and then rolls quickly, you got to get out. Now, I don't think I would have shorted that right then myself, because you could easily get a higher low than this and still head up. So I wouldn't have shorted it. And we didn't short it. Matter of fact, that particular one was just didn't go our way. And that's what we're talking about today, is get out of those trades early. You know, if you, one thing about it though, keep in mind, this is one thing I want you to really take home from this too though. This background right here is not good for mid-band trades. Now, for a breakout trade like that, where it went above mid-band and you want to take a chance, you know, we called it and probably took, you know, we took the chance as far as that goes. But keep in mind that this colored background, you want this trade here and this trade here. You're looking for line 2 and line 1 trades. Okay, that one. Now, granted, this one even only did 10 ticks. This one only did 10 ticks. And then after that, it did start breaking down. So let's say, for instance, that you said, you know what, if this goes ahead and breaks down below this 35, I'm just going to go ahead and take a short. Well, we did call that, and it definitely made up for that one. But remember on Friday, I think that was the only one that we did get that was bad, wasn't it? Because didn't we get this over here? We got this, and I even called 74 if I remember right. Yeah, so we were up nicely on this. We just happened to get wicked in that one. But keep in mind that it was called down here, so most people that were in it down here didn't feel heat until it took out that swing or went back in the box, which is what they got in, like across there, right? I'd have to look at my log to see what I actually physically traded on that. But now let's look at this one right here, and let's see, where would you get in this trade right here? All right, you change trends. You're heading up toward mid-band. Could you start boxing this? Anybody? This is, I think, another scenario that let's just say you box it. You got a little swing, trying to take out a high. Let's say you box this right across here, like so. And let's say that it does get you into the trade. It doesn't look like it did though. No. Keep going. Everybody see what I'm doing right here? Now, could you get in that trade right there? Yes. See, what it did is it went up here like that. It's taken out this little, see how you have a high, low, lower high candle, and then it breaks? Could you take this trade right here? And the answer is yes. Now, if you're less gutsy than that, look to the left instead, and you'd want to take out that swing, and you still got a good trade. Lost voice? That's weird. Everybody's saying I lost voice. Everybody hearing my voice? Oh, everybody can hear me. Okay. Okay. Does everybody see how we're going to trade this on Monday, though? Because keep in mind that if you will train your mind to see this particular trade and just go for mid-band at first, if it just keeps trucking through it like they sometimes do, then stick with it. Like this phantom trade over here, to give an example. You know, don't take it before it gets through line 6. You take it at, you know, even line 7. Let's say that you took it right here. You box this in. Now that's one of those that you'd feel a little bit of heat, and you got to decide if if you were up for the day, if you want to stick with it or not. If it breaks out, comes back in it, you can get out. You can go back in when it goes back out of the box. That's what Charles did the other day, remember? When he had that box turned on, kept getting that long trade. Same thing with this one. Short trade, goes back in the box, you get out. Nice little trade then. But with this color background, like that, phantom trades to the short side. And with this color background, phantom trades to the long side. And they won't all work out, believe me, but they will work out usually for a scalp. You know, this little line 1 trade right here, for instance, close below line 2 like I like. Okay. This one didn't touch line 2. I don't take that trade. This little trade bounced off of line 1. Let's say you're in on 29 or 30. You got up to 37 and right back in your face. You get out. You have to. If you don't, you're going to end up, being on the wrong side of the trade. Otherwise, if you do happen to get in, like let's say that you got in on this bar right here, you get out only when it closes back inside the box, or you get your 10 ticks. And that might have gotten 10 ticks, it might not have. But that could be a scratch trade as far as that goes to me. Yeah, the background, Bob, in my personal opinion, is pretty important because this color background, you're looking for phantoms. This color background, you're looking for phantoms, but they can, after that, they can break, because a lot of times you'll find that they do go ahead and break down. So your first time into phantom after a trend change is your best. If they ratchet up, I usually do take the second one. So that would have been definitely a legitimate phantom trade. And it, amazingly, if you're into counting coin quickly, you do get some coin on the trade. You can always take a $100 bill on any trade you want too. With 2 contracts, you can get 5 ticks pretty easily on those phantoms, and that'd be a $100 bill anyway. All right, let's see, stupid question, but how do you know where these range bars open and close? Oh, that's easy, Lisa, on your question. That's not a stupid question, by the way. You can always tell where they close, but if you can't see where they close, see, this one, for instance, closed up, that one closed down, that one closed down, that one closed down, that one closed down, that up, down, up, down, up. Okay, but if you don't see that, just go to these bars right here and change it to open, high, low, close instead, and strengthen and there you can see it. See how that's down, that's down, that's down, that's down, that's up. Anytime you have on a open, high, low, close type bar, they open on the left, close on the right. Okay, and on candles, I've just learned where I can read them. It's easy for me to see it. But if you ever have problems with that, just go to this little bar and you'll see it for sure. Open, close, open, close, open, close, open, close, open, close, open, close, and so on. I love candlesticks myself too. Where did I do that, Bob? Right up here. Just go to your little pencil, not pencil, your bar style, right next to the pencil, and just go to open, high, low, close. And then to thicken them, you just hold your Alt key down and your up arrow and down arrow. Down arrow makes them thicker, up arrow makes them thinner. Okay? Some people like this particular bar, actually. I don't personally. I like candlesticks. Okay, we ran a little bit over. Did everybody get something out of this today? And again, keep in mind that if you get on the wrong side of a trade, and you'll find that we call very few of them that won't work out. But that one, for instance, above 50, if anybody took that on Friday, but also keep in mind that the trade was called down here at Phantom too. Because if they touch this Phantom line 2, I will take that trade if the bar closes up. Now, if it closes down through 2, I'm happier. See how this one closed down, then closed up above line 2? I'm usually in that trade right there. And usually on this particular one, I'll give it a little wiggle room and put my stop just inside the shadow. And that little trade worked out too. Yeah, see, Bob even says, yeah, you sure did. I had to exit earlier and re-enter if you were right. Yeah. Yeah. Okay. And keep in mind too, there's one thing, these markets are constantly trying to take your money. We've just got to be smarter than they are. Yeah, Stephen, as a matter of fact, I Skyped you yesterday. I'll be happy to install. You want to just go ahead and install it right after we close this? Just go to our contact link, grab me a TeamViewer, and I'll put that on your new Alienware. All right. I hope this helps out, everyone. Thanks very much for coming. And also keep in mind, too, that if you traded the gold on Friday that was called and the oil that was called, you had to have made money, because the gold trade alone was phenomenal. And the oil was a little on the sloppy side. And we even said when it was in this area right here, oil was getting a little on the sloppy side, but I still like that trade for 10 and that trade for 10 if I can get it. Oh, Kenneth, I'll show those pictures again. Everybody want to see those before we leave? Just 1 second. This is what's my name and then Lion King on the jacket. That's cool, isn't it? This is being recorded, by the way. And then this is the back of the jacket, which is totally awesome. And then this is the ugly guy at the computer wearing the jacket. Let's see if I can get it. Yeah, right there. That's me. Yep. Been around for 66 years. Got my Viper hat on. Got my, you can see my Kathy Ireland type desk. This is my 30-inch monitor that y'all see every day. This is the 27 to the side, and then there's another 27 to the side, and another 27 to the side, and then 2 more over here. All right. Can't see my eyes too much. Linda didn't get flash on it. But anyway, it was a quick picture. Just sit here at my desk every day and, you know, try to make money every day. All right. Thanks, everybody. We will see you on Monday morning. Have a great weekend. And remember, next week, if you're a Top Step trader, you cannot trade next week on your live account. Okay? Very important. All right. Matter of fact, what I did on mine personally, because I know we've got some people that are Top Step trader, I removed my account in NinjaTrader. That way I can't accidentally trade on it. One Up, I don't think there's a problem with, Herman, at all. I'm going to trade it. I'm going to trade my with my son and daughter on hers, but Linda and I can't trade next week on ours. Yeah, if you're not funded, you can still trade. I've got 2 accounts that my son and daughter are working on, and my son's really close to being funded on his. Plus, we're doing a second one for him also so that he can be funded on 2 of them. That way, if he ever loses one. All right. Thanks, everybody. Have a great day. And Gary B says he's in the second stage. Good deal. Second stage is the stage before total funding. You'll love it. All right. Thanks, everybody. Have a good one. Let's see. Stephen, on yours, I'll hit you up on Skype here in just a minute. We'll get your scripts on. Thanks, everyone.